In today's video, we will be looking at one of the most underrated POI when it comes to forex trading and smart money concepts, and that is imbalance price action. So, what is imbalance price action? Imbalance price action are simply candlesticks that fill up the fair value gap. Okay, for example, if you look at this first one here, you can see that we have a fair value gap between this first candle and the third candle. Okay, so an imbalance price action IPA can be identified once you have a 3 candle setup: the first, the second, and the third. Okay, and if you look at it, between the first and the third, if they are imbalanced, then you can say that the candle that fills up that imbalance is the IPA candle, and this is a very strong point of interest when it comes to looking for a trade setup. Now, if you look at this other one here, what is not considered an IPA is simply this situation. Like this candle now, this is not an IPA candle because there is no form of imbalance here. Okay, now this is a bearish IPA. Okay, now for the bullish IPA, you also identify 3 candles, 1, 2, 3, and look for fair value gap between the third and the first. Okay, in this case, we have a fair value gap. So the candle that closes that fair value gap when price comes down is this candle here. So this candle is a very strong candle, which is the IPA candle. And when price gets here, most times price reacts from it. Okay, and that reaction is what we trade as a trader in terms of intraday or scalping. The same thing applies here. When market comes towards that IPA candle, we look for a trade setup to go short. And this side here, when market comes to the IPA candle up, we look for trade setup to go long. Now, sometimes your IPA candle can also be your order block. In this case, your IPA candles sometimes can also be your order block. Okay, when that order block is untested. Okay, that is why most people focus on this order block without looking at this. They focus on this. This is a well-known fact that, okay, this is an order block, the last bullish candle before the bearish move, order block, and it's a high probability order block because it's an IPA, meaning there is a fair value gap before it. So this candle closes the fair value gap, and that makes an IPA can either be bullish candle or bearish candle. It doesn't matter, as long as that candle closes the imbalance is an IPA, and in this case is your order block. Okay, so it makes sense for you to look for trade once price trades in here, and then look for a bearish move. Same thing with this. Your IPA candle is your order block here, the last bullish candle before the move up. So you can highlight that as your point of interest. And remember, your point of interest are simply areas where when price gets to, you want to start trading. You want to start looking for setups to go in your intended direction. So in this case here, we have market comes down here. Okay, when it gets in here, because it has filled up the imbalance, you can decide to look for trade setup. And most people, if you do not understand IPA, price may move from areas like this. Okay, this hidden base. If this has happened to you before, you can put it in the chat, whereby you are looking for price to mitigate your untapped or fresh order block, and price simply did something like this. Tap into this point of interest, hidden base, and then left without you. If this has happened to you, put it in the comment section, because the reason why this happened is because you do not understand the concept of imbalance field. When the imbalance is filled, okay, there's a high probability for price to respect that level and give you a reaction. Now listen to me, I'm not saying that price should move here outrightly and then continue, but you might get some reaction here for a trade, and that is what I'm trying to explain in this video. Also, which time frame is best to look at IPA? Okay, which time frame is best? Now, which time frame is best to look for IPA? From my experience, IPA on the higher time frame have a higher probability of being respected than IPA on the lower time frame. And by higher time frame, I mean monthly, weekly, daily, and H4. Okay, this is what I use IPA for. I use it to gauge the point of interest on the higher time frame, because the higher the time frame, the more orders are seated in that particular point of interest, and there's likelihood that there will be a reaction for you to take the trade. So now I'm going to go to the chart to illustrate some of the examples, okay, when it comes to looking for IPA and how to trade them. Now, as I said, from the weekly time frame, IPA are very, very powerful. So we're going to look at this weekly chart and then mark out some of our IPA. In this case here, this is an IPA, but in this particular case, price did not get there. This is the candle that fill up the imbalance, okay, in case you want it on the chart. This is it. This is an IPA candle. Okay, this is an IPA candle here as well. We have an IPA. Price did not tap on it. This is an IPA. In this case, you can see here, price tap on the IPA candle and then went low. They are very key areas for you to start looking for buying and selling. And I'm also going to show you the confluence that I use. I like using confluence, and if you stay to the end, you will catch up with the confluence. So you can use that when you are trading. Like this candle here, look at this candle. This candle is not an IPA candle. Why is it not an IPA? Because when you look at the three candles, this candle has already mitigated that there is no fair value gap. So rather, this is your IPA candle here. But in this case, it has not been tested. So these are areas in the future, okay? Someone will say, oh, it has not been tested and it's no longer important. They are. These are levels in the future that you should be looking out for in case price comes towards that area, okay? These are areas where you see some reaction from the market. Now, this is an IPA candle. And in this case, I don't think it was mitigated. So this is also a very important level in the future. If price decides to trade up here, this will be a major obstacle where price will go low. Now, if you look at this, we have an IPA, and this IPA is also an order block. That's what I was saying, that your IPA can be any color. It could be bullish, it could be bearish. So in this case, market came up, tap into the IPA. You can start looking for trade setup to take the price to the downside, okay? Also, I believe there's an IPA here. There's an IPA here, which price also mitigated. Price came in and tapped into the IPA. So how do you trade this IPA? For example, let's assume that you are looking at this particular time frame here, and you are looking to short the market because the market is what? Overall bearish. The market is overall bearish. You want to short the market. So how do you do here? What you need to do is simply mark out your point of interest on the higher time frame. For example, let's look at this one, this recent one. This is an IPA, but at the same time an order block. Okay. Now, if you go to the daily, on the daily time frame now, we have an IPA, weekly IPA, and we also have daily IPA here. which is a kind of confluence, and this is what I like seeing to give my trade setup a higher probability of succeeding. Why? Because I have a confluence in terms of multi-time frame analysis. I have a confluence on the weekly that zone is okay to move, and if you go to the daily, I also have a confluence, so I can refine, take out this and focus on this one on the daily first. Okay, so if you go to the 8 hours here, what can you see? We also have 8-hour IPA. What can we see here? On the 4-hour, we have a 4-hour IPA. You can refine this to the 4-hour IPA if you wish. Okay, then from there you hunt for your trade setup because you are expecting a reaction. Now, two things you can do. If you're a swing trader, you can simply trade once price tap into your 4-hour IPA and then stop loss above. Then you aim at the next liquidity point, okay, as your target, or you pick the 50%, okay, 50% as your entry. Sometimes you might not get it, okay, but in this case you get filled, stop loss above, or you go to a lower time frame for a chalk and flip entry. Okay, this chalk and flip entry will give you the highest risk to reward, and that is what most smart money traders want. At the same time, you might get a lot of fake chalk, okay, when it comes to the IPA. So let me use this and then use that to analyze. So in this case, you can go to the 5 minutes. Okay, now 5 minutes here, and just observe for your entry. In this case, where if you are looking for chalk, this is where your chalk is, which you might miss this move if you go to the 5 minutes. I have to be sincere. But if you go to the, let's say, 3 minutes, this is our chalk on the 3 minutes here. Okay, and the moment you see that chalk, you can plan for your entry. In this case, you can see here, even in the lower time frame. But I do not recommend you to look for entry on. But I do not recommend you to look for your entry on the smaller time frame IPA because it has low probability of succeeding. But the market is fractal. In this case, putting your stop loss here is very, very aggressive, and I'm not sure most traders will be able to do that because of this liquidity above. So the safest place to put your stop loss here might be above this high. Okay, so that is that on IPA. If you want to learn more on different concepts on forex, I'll see you in this video.